What is up, YouTube? So I got a couple questions, a couple DMs recently from a couple Forex traders about, hey, why don't I make some videos on tax tips so that way they can, strategize from a tax perspective. So today this one's for you. So the Forex market is a market that I really enjoy because it allows a lot of, let's just say, smaller accounts to do a lot with more. So I've seen certain brokers offer up to 100-to-1 margin. So what that means is you can take $1 and trade up to $100 off that initial investment. And if you have more capital, obviously it scales from there. This can be a good thing if you have an effective strategy because now you can compound profits without using your own capital. But on the flip side, it can be a bad thing because if you are not careful, you can wipe out your account if you get too big too fast. Now, the one thing that the Forex market does not have that the stock and options markets have is something called the pattern day trader rule. So the pattern day trader rule, one, was designed to keep new entrants to the market safe. And what the pattern day trader rule says is that you can make up to 3 round trip trades per 5-day rolling period. So essentially you can make 3-day trades a week. And if your account balance is greater than $25,000, you can make more than that. But this does not apply to the Forex market. But this is probably another reason why, maybe certain people might be attracted to the Forex market because there's a lot lower barrier to entry to actually trade. So one of the cool things Forex tax reporting is that the trades are reported in summary format. So you don't have to worry about wash sale calculations and things of that nature that maybe what our stock and options clients may have to do. So what happens is Forex gain and loss is reported on Schedule 1 as other income, right? So this is particularly awesome because if you are, let's just say you have a job or you have a business or something like that, and you racked up a ton of Forex losses because you were learning a new strategy or you were learning how to trade the market. So those losses will offset your other sources of income in full. So that's a huge advantage for Forex guys because on the stock and option side, if a newer trader takes a loss, then they're subject to what's called the capital loss limitation. So newer Forex traders, this is good. Now, if you are a newer trader and you have a big Forex loss and you don't have other income to offset against it, then if you're not a TTS trader or trader status is what we call that qualification, then you won't be able to carry forward what's called a net operating loss. So if you don't understand what trader status is, very much high level, is there are facts and circumstances established by the IRS that allows for business expense treatment and other advantages associated with that. So I have more content on this on our website, tradertaxcpa.com. Feel free to check that out. Now, the other thing I want to mention to you is if you are a profitable Forex trader, meaning you have been able to consistently take profits out of the market, one of the things you might consider is electing out of what's called Section 988. So Section 988 is the default tax treatment for Forex trades, which I just mentioned, other income on Schedule 1. Now, when you elect out of Section 988 into what's called Section 1256, the nature of your taxes or taxable gain changes. So Section 1256 gets a blended long-term, short-term capital gain rate. So 60% of your gains would be taxed at the long-term rate, and then 40% would be subject to short-term capital gains or ordinary income tax rates. So the maximum tax that you would pay if you were at the top tax bracket would be 26.8%. If you compare that to ordinary income, that's 37%. So if you're a profitable Forex trader, you might want to consider electing Section 1256. Now, if you qualify for trader status, that's icing on the cake now because now you can also deduct a lot of your business expenses. So if you travel to maybe Forex conferences, meetups, if you pay for market data, if you're paying expensive platform fees, there's a host of things that you can deduct simply because you are actively trading the Forex market. So leave us a comment if there's something that I said that wasn't clear or if something that you wanted me to clarify. If you want to take this conversation even further, feel free to reach out to me. You can schedule a consultation. And most importantly, if you like the content that we are producing, feel free to give us a like, give us a subscribe, and we'll continue to put out trading content for the trading community. Have a good day.